0% income tax, no capital gains, no inheritance tax. It sounds like a dream. Every year, thousands of people pack up their lives and move to places like Dubai, Monaco, and the Cayman Islands, chasing the promise of keeping every dollar they earn. But here's what the glossy brochures never mention. In Monaco, you need €500,000 sitting in a bank just to apply for residency. In Singapore, a Toyota Corolla costs over $150,000. In Bermuda, a simple restaurant meal runs $60. And in Dubai, losing your job means you have 30 to 60 days to leave the country. The truth is, tax-free is never actually free. And by the time most people figure that out, they've already signed the lease. The pitch is simple and seductive. Move to a zero-tax jurisdiction, keep your full salary, and watch your wealth grow faster than it ever could back home. Social media is flooded with influencers filming from Dubai penthouses and Monaco yachts, showing off a lifestyle built on the magic of 0% tax. And technically, they're not lying. These places really do charge zero income tax. But what they conveniently leave out is everything else you'll pay instead. Because governments need revenue. And when they don't get it from income tax, they get it from somewhere else. Higher rents, steeper import duties, mandatory insurance, hidden fees buried in the fine print. The question isn't whether you'll pay. The question is how. Dubai is the poster child of tax-free living. Zero income tax, zero capital gains tax, a golden visa program, and a skyline that screams ambition. But let's look at what it actually costs to live there. A one-bedroom apartment in a decent area runs $2,000 to $3,000 a month. But that's just the start. Before you even move in, you'll pay a 5% security deposit, a 5% agency commission, a 2,000 dirham utility deposit, a separate chiller deposit, and a municipality housing fee that adds another 5% of your annual rent to your utility bill every single month. By the time you hand over the keys, you've paid 13 to 15% of your annual rent and fees alone. That's before you buy a single grocery. Add international school fees for one child, which range from $11,000 to $27,000 a year. Add mandatory health insurance at $2,000 to $5,000 annually. Add a 5% VAT introduced in 2018. And suddenly, the 0% income tax starts looking a lot less impressive. But the biggest hidden cost in Dubai isn't financial. It's structural. Your visa is tied to your employer. If you lose your job, you have 30 to 60 days to find a new one or leave the country. Your children's school enrollment, your apartment lease, your bank account, all connected to that employer-sponsored visa. And since 2023, the UAE isn't even truly tax-free for businesses anymore. A 9% corporate tax now applies to profits above $102,000. The Washington Institute published an article with the headline, quote, "The UAE formally ceases to be a tax-free haven," end quote. Nearly 30% of American expats return from Dubai within the first year. The number one reason? The cost of living completely cancels out the tax savings. If Dubai is the golden cage, Monaco is the velvet prison. Zero income tax since 1869. But entry requires a minimum bank deposit of €500,000, and most banks won't even talk to you below $1 million. You must secure a rental lease before you even apply for residency, and the average one-bedroom apartment costs €6,000 a month. That's €72,000 a year, just for a place to sleep. Property prices average €52,000 per square meter. A modest 100 square meter apartment will set you back €5 to €6 million. A cappuccino costs nearly €5. A simple restaurant meal is €29 per person. Groceries run 69% higher than the European average. A family of four needs at least €20,000 a month to live comfortably. That's €240,000 a year. At that spending level, you'd need a pre-tax income of well over $300,000 in a normal country to match it. The tax savings only make sense if you're already earning millions. Singapore doesn't technically have zero income tax, but its rates are among the lowest in the developed world. What it does have is a cost structure that can blindside newcomers. Start with cars. To own a vehicle in Singapore, you first need a certificate of entitlement. In January 2026, a COE for a standard car cost over 100,000 Singapore dollars. That's roughly 75,000 US dollars, just for the right to own a car for 10 years. Add the actual vehicle price, registration fees, and road tax, and a basic Toyota Corolla can cost over $150,000. Housing isn't much easier. The average resale price for a public housing flat is 612,000 Singapore dollars. Private condos average nearly 2 million. For expats who don't qualify for public housing, you're looking at $5,000 to $15,000 a month in rent for a family-sized unit. And here's the real kicker. Expats don't get access to Singapore's retirement savings fund, called the CPF. No subsidized healthcare, no housing grants, no pension. You pay every cost at the unsubsidized rate. The Caribbean tax havens have their own version of the hidden price tag. In the Cayman Islands, there's no income tax, but import duties run 22 to 27% on virtually everything. Since 90% of food is imported, groceries cost 37% more than in the United States. A gallon of milk costs almost $7. A dozen eggs, $9. A couple's monthly grocery bill can hit nearly $2,000. Rent for a one-bedroom in Georgetown runs about $3,500 a month. Bermuda is even more extreme. The World Bank estimates that living costs in Bermuda are nearly 4 times those of the United States. A budget restaurant meal costs $60. A loaf of bread costs $8. Rent for a one-bedroom apartment in Hamilton averages $3,549 a month. And here's the twist that nobody talks about. Bermuda charges a payroll tax of up to 12.5% on employees. They call it a payroll tax, not an income tax. But if 12.5% of your salary goes to the government every paycheck, what's the difference? The Bahamas rounds out the tax-free island trio. No income tax, no capital gains tax, but a 10% VAT on most goods. Import duties that range from 5 to 35%, with luxury items and vehicles hitting 75% or higher. And then there's the cost that's unique to paradise. Hurricane insurance. Full coverage can cost up to $30,000 a year for a single property. The premiums are so steep that many homeowners simply skip it and self-insure, essentially gambling that the next Category 5 storm won't hit their house. Nassau ranks in the top 7% of the world's most expensive cities. When you combine VAT, import duties, inflated grocery prices, and insurance costs, the tax-free label starts to feel like a marketing slogan. There's a deeper cost that goes beyond rent and groceries. In countries with no income tax, there's usually no social safety net either. No universal health care, no unemployment insurance, no state pension, no disability coverage. In Dubai, if you lose your job, you get 60% of your basic salary for a maximum of 3 months, and you have to claim it within 30 days. In the Cayman Islands and Bermuda, there's no government unemployment program at all. In Singapore, expats have zero access to the national retirement or healthcare systems. What does this mean in practice? It means you are the safety net. Every dollar you save on income tax, you need to spend on private insurance, private retirement funds, private healthcare, and private school tuition. In a normal tax-paying country, these costs are shared across millions of taxpayers. In a tax-free country, you carry them alone. So who actually comes out ahead? The answer is brutally simple. People who are already wealthy. If you earn $50,000 a year and move to Dubai, you'll save roughly $7,000 to $10,000 in income tax. But you'll spend $15,000 more on rent, $5,000 on insurance, $10,000 on school fees, and thousands more on deposits and fees. You're underwater before the first year ends. But if you earn $2 million a year, the math flips entirely. Your tax savings could reach $500,000 or more, which easily covers Monaco's rent, private healthcare, and international schools with plenty left over. Tax-free countries aren't designed for the middle class. They're designed for people who can absorb the inflated cost of living and still come out significantly ahead. For everyone else, it's a lifestyle trade, not a financial upgrade. Let's put real numbers side by side. An American earning $120,000 a year. In the United States, you'd pay roughly 25% in federal and state income tax, leaving you $90,000. Rent in a mid-tier city averages $1,500 a month. Health insurance through your employer costs a few hundred a month. Public school is free. Your net cost of living including rent, insurance, and basic expenses might total $55,000 a year, leaving you $35,000 in savings. Now move to Dubai. You save $30,000 in income tax, so you keep all $120,000. But rent jumps to $2,500 a month. That's $30,000 a year. Add $5,000 for health insurance, $15,000 for international school for one child, $3,000 in setup deposits and fees, and $5,000 more in higher grocery and utility costs. Your total cost of living hits $58,000. Your savings? $62,000. You've gained $27,000, but you've lost free public school, unemployment insurance, social security contributions, and the right to stay in the country if you lose your job. Whether that's worth it depends on what you value. Tax-free countries aren't a scam. They deliver exactly what they promise: zero income tax. But zero income tax does not mean zero cost. The money you would have paid in taxes still leaves your pocket. It just leaves through different doors: rent, import duties, insurance premiums, school tuition, and the invisible cost of having no safety net beneath you. The expats who thrive in these countries share three things. They earn well above $200,000 a year. They have no school-age children or can afford elite private education. And they understand that tax residency is a business decision, not a lifestyle upgrade. For everyone else, the hidden price of living tax-free is often higher than the taxes they were trying to escape. If this changed how you think about tax-free countries, subscribe and hit the bell so you don't miss our deep dives into how tax systems really work around the world. Like this video if you learned something new. And leave a comment. Which country surprised you the most? Dubai, Monaco, Singapore, or Bermuda? We read every comment.